What to expect when selling an inherited property in a living trust in California. Dealing with the process of selling inherited property in California can feel overwhelming, especially if you're not familiar with the necessary steps involved when you become responsible for selling an inherited property in a living trust in California. On top of the emotional toll of losing a loved one, managing all the details of an inherited property while grieving can add additional strain. If you should find yourself in this situation, don't worry. This comprehensive guide is here to help, providing valuable assistance by explaining the step-to-step procedure for selling an inherited property and aiming to minimize the stress that comes along with it. Hi, I'm KimWard. Welcome back to my channel. I like to think of myself as your guide by your side when it comes to all the details of selling an inherited property in probate or a living trust in California, especially San Diego. Now let's get started with what to expect when you are responsible for inherited property. Inheriting a house from a loved one can be both a meaningful gift and present challenges depending on your personal situation. When faced with this situation, you typically have three options: moving into the inherited property, rent it out, or sell the property in a living trust or probate. If your intention is to sell the inherited property, this guide is designed to provide you with the valuable insights and strategies to help you navigate the process smoothly, avoiding common pitfalls and unnecessary obstacles that can drain your time, finances, and your patience. It's important to note that when managing and selling an inherited property, it is not as straightforward as receiving the keys and title to the house. There are several factors to consider regardless of whether you decide to sell the inherited property or explore other options. First, you want to know what the market value of the inherited home is. Exploring online tools such as home value estimators can provide you with a helpful starting point to gauge the approximate value of the inherited property in relation to similar properties nearby. It's worth noting, though, that the figure you see on these platforms doesn't necessarily guarantee that you'll be able to sell at that price. So, if you can't sell for that exact amount, why? It's the condition of the house itself and the prevailing market conditions in the area. They play a significant role in determining the actual selling price. So while online estimators, they offer valuable insights, it's important to consider additional factors when evaluating the potential sale value of the inherited property. Next, let's consider, is there any outstanding mortgage or other debts or taxes due on the inherited property? It's crucial to determine the remaining balance on any mortgage or loan attached to the inherited property. To gain a clear understanding of the potential proceeds the beneficiaries could receive from selling the inherited property, it is highly recommended to seek the guidance from a knowledgeable estate planning attorney or a reputable realtor with experience in handling inherited properties. Their expertise will help you to navigate the intricacies of the selling process and provide valuable insights on the net financial outcome for the beneficiaries. By reaching out to these professionals, you can make informed decisions and ensure a smoother experience when selling the inherited property. Now let's go into discussing any other outstanding debts or taxes. Apart from considering the remaining mortgage balance, it's important to take into account any other outstanding bills related to the inherited property. Specifically, you should inquire about the payment status of the property taxes over the years. Were they diligently paid annually, or have they accumulated over time, requiring you to allocate a portion of the proceeds from selling the inherited property to settle them? Being aware of these potential financial obligations will enable you to make well-informed decisions and ensure a smoother transaction when selling the inherited property. How many beneficiaries are involved with the inherited property? The course of action regarding the inherited property can be influenced by the number of individuals involved in the inheritance. It's crucial to establish a consensus among all parties regarding the decision to sell the inherited property. Additionally, determining who will take charge of managing the estate sale and overseeing the process of selling the home itself is an important consideration. Open and respectful communication among all involved is key to reaching an agreement and ensuring a smooth and coordinated approach to the sale. By addressing these aspects together, you can navigate the process effectively and harmoniously. Now, let's touch on capital gains and other tax implications of selling an inherited property. When considering the sale of an inherited property, it's important to assess the financial implications of such a decision. It includes understanding the potential taxes that may apply to the sale proceeds or the inheritance itself. While tax laws can vary from state to state, the following resources can provide insights into the tax considerations associated with selling an inherited property. Please keep in mind that we are not tax professionals, and we recommend you verify all this information with your trusted tax professional. 1. Home sale tax exclusion does not apply to inherited properties. Typically, if you sell a property that you've lived in for at least 2 of the previous 5 years, you can benefit from a tax exclusion. This means that up to $250,000 of the proceeds for a single homeowner and up to $500,000 for a married couple can be tax-free. However, unless you plan to reside in the inherited property for at least 2 years, you won't qualify for this type of an exclusion. Number 2, the good news is stepped up basis for inherited properties. In the case of inherited property, the tax basis is determined by the fair market value of the property at the time of the previous owner's death. This prevents substantial taxes on properties that have significantly appreciated in value over the years. Essentially, you won't be subject to capital gains tax up until the point of the previous owner's death. If you hold on to the property for a while before selling, you may be liable for taxes on any increase in its value during your ownership. Again, talk to your tax professional. Number 3, reporting sale proceeds. Selling an inherited property requires reporting the proceeds as taxable income to the IRS. The taxable amount is based on the fair market value and other improvements used to calculate the basis. Even if no taxes are owed on the sale of the inherited property, it is still necessary to report it as a reportable event. The IRS publication provides instructions on where to find relevant information and which forms to use. Number 4, distinction between inheritance tax and estate tax. It's important to note the difference between inheritance tax and estate tax, as well as potential variations among states. Tax laws, they can be very complex, so seeking guidance from an accountant or attorney is advisable to navigate the intricacies of the financial obligations associated with inherited property. Again, by familiarizing yourself with these aspects and seeking professional advice, you can gain a clearer understanding of the tax considerations tied to selling an inherited property and ensure compliance with the relevant regulations. Again, there are a lot of intricacies in selling an inherited property, so do please seek the professional advice that you need. Thank you for watching. I hope you found this of value. If you did, hit that like button. Go ahead and comment down below and ask any questions you might have. I'll be happy to answer them, and I look forward to seeing you next week.